Will Tesla go up to $400 in a year? We think it's possible, and in this video, we will explain why. So stay tuned, and don't forget to subscribe to the channel to get more updates like this. Tesla stock has been roaring all of this year. Last week, it grew by 12%. So why is the stock booming? In November last year, Tesla open-sourced the TIC specs for its NACS charging system, which is considered more reliable and faster than current industry standard, the CCS. By February this year, it had also announced that it would be opening up some of its charging stations to competitors. And in the last few weeks, both GM and Ford have announced that they will be switching to Tesla's charging system in their newer models. Even their existing customers will get to use the Tesla charging network by spring. This is being seen as a game changer for NACS and Tesla. It will create pressure on the US administration to accept NACS as its default charging standard. But why is that a big deal? The Biden administration has committed itself to building a national network of 500,000 electric vehicle chargers by 2030, but currently they're supposed to be CCS chargers. The bipartisan infrastructure law, which came into effect in April this year, included $2.5 billion in grants for a national EV charging network. If the NACS becomes the national standard, a large portion of this grant will end up with Tesla. Apart from that, Tesla will also get a bump in revenue from charging. This could be somewhere close to $3 to $4 billion, as per Wedbush securities analyst Dan Ives.
And I think when you look at the supercharger perspective, from a revenue perspective, you go out 2025, GM Ford, they get 15% share. You're looking now an incremental of $3 billion, $4 billion a year of revenue that was not there.
So if we add up all that, it should give Tesla a boost of about $4 billion every year, which should only add about $10 to its stock price at the current price-to-sales ratio. But is that all there is to it? Even though it looks like that on the surface, we are just seeing the tip of the iceberg. The value of the opportunity is much higher. As per a study done by S&P Global Mobility in January this year, the need for charging stations is going to explode in the coming few years. From about 150,000 stations right now, the report estimates that by 2030, we will need close to 2.3 billion charging stations. That's a staggering growth rate of 47%. As per the latest financial year report for Tesla, its revenue under the service and other segment is about $6 billion, or 7% of its total revenue. This includes supercharging, servicing, parts, used car sales, and other ongoing service-related charges. If Tesla can corner the charging market, that could give it a significant boost in revenue. With a 47% growth rate, this opportunity could be worth between $40 to $45 billion annually for Tesla by 2030. What it also means is that as the charging network grows rapidly, adoption of electric vehicles is going to skyrocket. A recent survey by KPMG found that automakers expect roughly 50% of new car sales to be electric by 2030. Tesla has a 50% market share in new unit sales of electric vehicles, so that means it will benefit the most from this growth. These two are the real iceberg hidden under the surface of the water, and when you factor them in, it is possible that Tesla stock could end up at 400 or even more within a year. So what's your view on Tesla? Where will it be in a year? Let us know in the comments below. And if you want to get the fastest moving stocks based on world news and current events every morning before the market opens in your inbox, subscribe to our free newsletter, theelitetrade.club. The link to join is in the description of this video. Thank you for watching.